Hello and welcome to the Crypto Beat. My name is Tim Copeland. I'm the blog's editor-in-chief. Joining me today, we have Copeland and Goldfeder, CEO and co-founder of Offchain Labs. Welcome to the show. How are you doing?
Thank you. It's great to be here. I'm doing well today.
Awesome. Right. So before we get started, I want to give a shout out to our sponsor, Awaken, a crypto tech software provider. Make sure to use the code TheCryptoBeat for $25 free credit. Now, today's episode is around Ethereum Layer 2s. We had Matter Labs on previously, and we might have another one in the works. So it's been a bit of a theme recently, but we're getting multiple different perspectives. So I'm going to start with Arbitrum to begin with. In February, you released the Bold protocol. What is that, and what does it do?
From day one of not actually Arbitrum mainnet, but actually the Arbitrum testnet, going all the way back to 2020, Arbitrum has always shipped live together with security proofs, which are called fraud proofs in the case of an optimistic rollup. And to us, it was obvious. It was only, I'll only stress it now because years later, this actually has become not the default option, where many actually ship without these security proofs in place. But there's been a lot of innovation and many different layers of innovation that has happened over time in building up. If you look at the fraud proofs that existed, the protocols that existed in 2020 in the first testnet, we've adapted them many times and really improved them many times. So Bold is the newest and best optimistic rollup fraud proof protocol that exists, and it really improves over the previous protocols in a few ways, but I'll focus on just two ways here. I would encourage those that are interested and more technically inclined to actually go and look at the details, look at the spec, look at the paper to really understand what happens. But number one is many know that previously the Arbitrum chains had a list of an allow list of those who could challenge on the network. So validation wasn't open to anyone. There was a list of entities or people that could actually go ahead and validate. Now, the nice thing is in an optimistic rollup, you only need there to be one honest validator. So the list already included folks like the Ethereum Foundation, companies like Google and et cetera, and other crypto native companies as well, that gave people like Etherscan, gave people a lot of comfort that this was being validated correctly. But if you fast forward to today, with Bold, now anybody can validate the network. And the reason, by the way, to go one small step deeper, the reason why this previously wasn't open to all and now is because there was something called delay attacks in the previous protocol. And actually, most competing protocols, even the ones that are in production today, do have some form of delay attacks in them. And what a delay attack is, it means someone can delay settlement and cause settlement to get delayed. So cause say withdrawals from the chain to get delayed if they pay like linear money for that. So if I pay $1, I can cause your dollar to get delayed, for some or significant amount of time. So Bold is actually an acronym for bounded liquidity delay. So it puts tight bounds on those delays and makes them very, very difficult to and expensive to actually delay the protocol. And now it becomes feasible to open it up to everyone, because when there's just a group of like 10 or 12 trusted, parties, who they are. If the Ethereum Foundation's node is like doing something malicious, he would just get in a call and say, hey, what are you guys doing? Like, stop that. If you open this up to everyone, you don't know identities anymore. So someone that just wants to pay money to delay the protocol can actually cause real damage to the system in a way that's not trackable, anonymous. You can't get on the phone with them and say, hey, cut it out. So this is like a necessity, we think, to open this up to the public. And that's one big thing. And the second nice property of Bold, and there are many, but the second one that I'll focus on is it also allows different people to team together and pool together for challenges. So in previous protocols, if there's something that you didn't like, right? So a validator submitted a state that you thought was wrong, and you're a validator, you can go on and challenge. But even if you saw another validator challenge, you had to challenge yourself, because it's a multi-round protocol. And just because that challenger challenged today, maybe in the next round of the protocol, they'll do the wrong thing, or you'll disagree with them. So you'll say, oh, I don't need a challenge because like Alice is doing it, but maybe Alice is really malicious and Alice is challenging now, but she's going to give up the challenge in the next round. And at that point, you're like, oh, I relied on Alice and it doesn't work. But with Bold, you actually have commitments not only to the first round, but to every round of the protocol, which basically means you can pool together and actually pool together capital as well for bonds in a way that you don't have to trust that someone else is going to do the right thing. So all in all, a big move forward for innovation in fraud proofs and fraud proof protocols and optimistic rollups. And concretely, the validation of the network is now open, so anyone at home can go ahead and spin up a validator and validate the network directly. And because the optimistic rollup security property is you only need one honest validator, it means that anyone can today, any person can unilaterally guarantee the correctness of any Arbitrum chain running the rollup protocol with Bold.
So where does that put Arbitrum on a scale of like 1 to fully decentralized?
So when it comes to security, like the security of the network, Arbitrum is fully decentralized. This is, this is it. This is like the holy grail of decentralizations for those securing the network. So I would say, and when it comes to the technical upgrades of the network, when it comes to even funding for the network, the Arbitrum is a leader in decentralization. Right, the Arbitrum DAO has real power to, control the upgrades of the chain, control the treasury. All the fees in the Arbitrum ecosystem don't go to the Arbitrum Foundation centralized wallet, don't go to Offchain Labs, don't go to some individual. They go to the treasury on chain. And actually, the Arbitrum DAO has collected, I think, somewhere like 20,000 plus ETH and has never sold any of those ETH either. So very, very decentralized in many ways. But to answer your question and almost to flip it and focus on the negative, even though I don't like to, so I guess what you could say, what are the points that are not yet decentralized, or where can decentralization be improved in the network? And there are probably two different areas here, right? So Vitalik has a three-phase criteria. So there's stage 1, stage 0, stage 1, stage 2. Arbitrum was the first general roll-up and is currently still in what we call stage 1 decentralization. In order to get to stage 2, it has to do with the Security Council of the protocol. So the DAO, like I said, controls everything, but there is a Security Council, and all DAO upgrades, by the way, are delayed. The DAO can't move quickly. And for good reason, right? You want the DAO's processes to take time. There's voting, there's delay, so everyone can get on board. If the DAO does something you disagree with, you have time to get your money off. But then there's a Security Council. So why does the Security Council exist? Well, let's say there's a critical bug found in the Arbitrum network today. There's been a ton of security diligence over the years, billions and billions of dollars transacted, but you can never get to 0% chance that there's a bug. So let's say there's a bug found in the network that is deemed to be critical, and someone can say take money from some application or wallet or address in the network. What happens? Well, if the only path is to go to the DAO to fix this, you have to go to the DAO and say, hey, DAO, here's a critical vulnerability. Can you vote on whether we fix this? And obviously, that's not a very good idea, because the second you post that on the DAO public forum, some attacker will go ahead and exploit it and take all the money out. So the question is, how do we balance these two things? And that's where the notion of security councils come in. A security council is, in the case of Arbitrum, it's elected by the DAO. It's at the leisure of the DAO. The DAO can turn it off at any time, but while it exists, it's a 12-person council, and there are you need 9 votes to do an immediate action, right? So it's a 9 out of 12 council to do action. These members are throughout the ecosystem. They're voted on. I think there are 2 that are currently in Offchain Labs. So really not like in any way, we don't even have veto power on the network, right? So at all, it's very, very distributed, both geographically, from this perspective of companies where people work, etc. As really a collection of very strong people throughout the industry. In order to get to stage 2, you need to remove the emergency powers of the DAO. And it's actually kind of interesting. We could do that today, right? It's just about saying, hey, DAO, you no longer have this power. That power historically has not needed to been used, right? There's never been a critical attack of this sort that needed to actually use this power. So it's actually super, you can just say, why don't you just turn this off? You'll get stage 2, the block, and everyone else will cover this, as Arbitrum is the most decentralized rollup. And the answer is because I don't think that would be the responsible thing to today. I think we still want to have that security mechanism to do something immediate, even though we don't use it, even though it's hurting us on a decentralization scale, because that's, I think, still prudent. We're still would like to see some more mileage on the software until we're fully confident that we can turn off that capability. But it does actually, the way I just said it, it does present an interesting like paradox here, where those that care less about security can actually, leapfrog and get to stage 2 easily, right? Because there's nothing. It's not like we have to build this crazy machine to get to Arbitrum stage 2. We have to just turn a lever and say, Security Council, you no longer have these powers. That's why when I've spoken to Vitalik in the past, I've encouraged him. I said these phases these stages are good if they assume that everyone's doing the right thing and has the right intentions. But actually, I think stage 2 shouldn't just be you turned off the Security Council. It should be you turned off the Security Council and demonstrated that that was the responsible thing to do.
Talking of the DAO, you mentioned the DAO. There was a proposal in February by its recently appointed Growth Management Committee to deploy 7,500 ETH on Lido, Aave, and Fluid instead of protocols that are native to Arbitrum. There's a little bit of a backlash over this. What did you think about the move?
So I wasn't directly involved, in those conversations. I think that but I did did look into this and try to understand what happened, and I think that there was perhaps a bit of a misunderstanding of the scope of what this particular project was. And I do think that the DAO should be investing in Arbitrum ecosystem projects, and the DAO and the foundation do spend a lot more than that on grants and investments in Arbitrum projects. The Arbitrum Gaming Fund itself is a 200 million token fund. So, what I think happened here is, and this actually goes back to the difference between the DAO and everything and every other sort of structure in crypto that may look similar. The Arbitrum DAO is actually controlled by the token holders, owned by the token holders, and you have all these fees coming into the chain. And these fees actually go to the Arbitrum DAO. That's aside from the Arb treasury that it has and all that. And it has over time like these assets that are accumulating. And one way to think about it is basically as a sovereign wealth fund, right? The DAO has this export, this thing that it's really, really good at, this core strength, which is, creating block space and execution environments. And it's basically amassing, resources. And one, I think, reasonable thing to do is say, okay, how can the DAO earn yield or, really invest some of those resources? So my understanding is that for this particular, 7,500 ETH, the goal was, how can we invest in conservative products and get, a return for the DAO on these particular funds? Not to say that the DAO shouldn't otherwise and doesn't otherwise invest in other things as well. Just I think as part of a general strategy, it makes sense for the DAO to have ecosystem grants, but also if you think about the DAO as this fund that's controlled by the token holders, also for the DAO to have say, hey, how does it have conservative streams of income just to diversify its investments and income over time, which ultimately I think is a good idea, but probably could have been communicated better, to the community.
And what do you think about the upcoming Pectra upgrade to double the block count?
Yeah, we're talking about Arbitrum, but we at Offchain Labs actually built something else as well, which is Prism, which is the leading layer 1 consensus client. So we are not only like looking at this and saying, hey, do this, that's a very good thing. We are very, very involved in the development of this as well, whether it's Pectra, PeerDAS. We've been, I think for PeerDAS, we were for a long time, the Prism was the only client in the DevNet, right? So we are very, very actively involved in these activities and are very supportive. That being said, I do think also that upgrading like data availability is good, is important. As more rollups come on, we need more blobs, we need more data. But actually encouraging all rollups, all consumers of this data to view this as a limited resource and be conservative of it is also important, right? Because you can continue to upgrade, ad infinitum, but at some point, layer 2s need to work on how do we minimize spam transactions? How do we make sure that we're pricing resources correctly as well? And I think making sure that I'm all for increasing the supply, increasing the blob count, but I also think that we very much need to make sure that layer twos are making sustainable decisions on layer two as well, and not just relying on the layer one to do this. We, when building Arbitrum, setting the parameters, setting the fee parameters, do this very well. I think we don't just increase the gas in ways that I think are irresponsible. I think though others are doing things that I would put on that boundary today, and think that we need to be a little more conservative in how we use these resources, because it's otherwise never going to end.
There's been a lot of debate around layer twos not acting as a value sink for Ethereum, for Ether. Do you think that's the case, and whether there's anything the layer twos should do about it?
I think that layer twos definitely do add value to Ethereum, and obviously I would think that, so you can take that with a grain of salt. But if you look at, but the truth is, it's a little unfair to say, people say, oh, of course you say that you're layer two, but actually, like, before Arbitrum was in production, before any layer two was in production, Vitalik put out this post called the rollup centric roadmap for Ethereum, which basically predicted and actually architected in many ways exactly what would happen here. And in that post, he speaks about it being a good thing that layer twos have their own tokens and their own economic zones that they can focus on, and all these things today that people point to as negative things that, oh yeah, but this was never the vision. Actually, it's like, if you go back and look at the post and look at the roadmap, this was actually the vision that we set out to be. Now, the fact that Vitalik put this out ahead of time and wanted this, sure, doesn't mean that it's necessarily the right thing. So it's still a fair question, which is like, okay, great. I get that you did this on purpose. I get that this was architected. Is it a good thing? That's a fair question to ask. But I think many people, particularly outside the ecosystem, like to gloss over the fact that we did this on purpose and say, hey, these these layer twos popped up that are like terrible, and like we never expected this. Like, no, actually we expected this. This is what we wanted. But then the second question is, yeah, sure. Is it good for Ethereum? And I think the answer is absolutely yes. There's a pain in sort of a multi-tiered architecture, right? It's much easier. It's much easier up until a certain point to just put everything in one layer, right? You don't have to worry about different development teams, different timelines, different execution environments, and deviations from a single spec. It's much more efficient to just do everything like that. But there comes to a point where that just doesn't work anymore. That just doesn't scale and can't scale. And I think what we're seeing now is, Ethereum is paying that price, which is the pain of actually doing this and building this out in a way that's going to lay the foundation to scale 1,000x more than we can today. Others aren't paying that price. So during the time where we're paying that price, that seems simpler and easier and like obviously better. But then what you have is, and we've seen this just in the past few months with like high profile launches, and when these other ecosystems really can't handle it, that's the core difference. I think over time, as the traffic and usage and demand increases, just generally, and that will happen even, whatever happens, the whims of the current cycle over time, demand for these technologies is going to increase. That will become clearer and clearer. So I think that Ethereum's rollup centric roadmap positions not only the rollups, but positions Ethereum to win for the long term and be relevant and around for the long term. So I think, if you look at with like very narrow glasses and very short term, you could say, oh, this looks bad for Ethereum. It's fragmenting it. It's the value is going there, but like long term, we're building the rails for Ethereum to bring on the world's transactions, which no other ecosystem can hope to do.
And why do you think a lot of activity over the last year focused on Solana and Hyperliquid, as opposed to sort of like projects based on Ethereum Layer 2s?
Yeah, it's hard to speculate. And I think there's probably different reasons for different projects. Like take Hyperliquid. I think it's just a really, really good trader. You speak to a trader, they say this experience is just fantastic, right? I think they built an excellent product. They built it like all the liquidity is sourced from Arbitrum. So it's certainly very adjacent, I would say, to Arbitrum. I would call it inside, the broader Ethereum ecosystem. They position as a layer one, but it's obviously very closely connected to the things we're doing in Arbitrum and benefits very much from the Ethereum ecosystem. But I would say I think they just built a fantastic product and also did a good job building the community, even, with their airdrop and beyond. They did, I think, an excellent job of building a product, attracting a community, retaining the excitement. So hats off to them. When it comes to Solana, I think it's a mixture of a few things as well. They definitely do a great job with speaking to retail, building onboarding that retail can understand and use. I think Phantom, Jupiter, these are really good products that are intuitive and people like them and use them. I also think, and we started to see some of this with like some particular launches. There's more coordination than you might think, right? A lot less organic than you might think, than you might initially think for, say certain meme coin launches and the like, where it's not necessarily all like organic retail driven, which I think is obvious to many, but probably obvious to more after the last several weeks. So, I think they've done, though, all in all, a very good job in building a retail presence, and I definitely think that back to the thing I said before, it's easier to do that in a world that's not quote unquote fragmented, but it will take you to here. The trick is to figure out how to get past that, and Ethereum is taking the dive, if you will, the short-term dip in terms of, hey, we're going to like have these different roll-ups. We need to figure out how to exactly coordinate everyone and get that back. But once we get back here, we're going to be able to onboard so many more users. And my charts here, just for clarity, are more in terms of like adoption than it is like, I'm not like referring to price or anything like that. But the idea is that, from a user experience, adoption, ease of use perspective, sometimes it takes a little pain before it gets a lot better. And Ethereum is willing, and consistently, by the way, when you look at Ethereum, it's always willing, the community is willing to take on, 7-year-long engineering projects, right? To take on these projects, whether you think they're right or wrong, Ethereum always has a long-term focus around this and is willing to take on, some short-term pain for long-term success and sustainability.
How long do you think it could take? Like, are we talking 1 to 2 years, 5 years, 10 years?
No, I think we're in a very good position right now. I would say, and I can say this as someone who's like spending a lot of time at Offchain Labs now working on, solving Ethereum interop. We put out some things a few weeks ago about what we call the universal intent engine that's going to allow you to bridge to any chain that's supported in under 3 seconds, right? So like I think we're making extreme strides as an industry. The other thing that's happening is we were just at ETH Denver last week. There was we co-hosted an Ethereum Interop Summit, and there's just general interest in teams working together and solving this problem. Despite what I think many people think, I would say this is 10% a hard protocol problem and 90% a coordination problem and a user experience problem, right? So it's front end coordination, getting everyone together, getting people to want to solve this. I think is probably most of the issue. We're very hard at Offchain Labs working on putting out the tech for this. We've already started that, and it was received very well by the community, and we're not stopping and continuing. So my bold prediction, which doesn't seem so bold to me, but maybe from the outside, is that this will be a problem that's fully solved in 2025. We'll have a very strong Ethereum experience that abstracts away some of the perceived complexities or fragmentation that we have today.
Do you think that Ethereum Layer 2s are ready for Appchains like Unichain? Like, is the cross-chain experience there yet?
So again, this goes to this question of fragmentation, which there definitely exists today. But I think the important thing is, if you compare Ethereum to other ecosystems, in other ecosystems, there's typically a core set of one, maybe it's a few different ones, but that are closely related development teams. In Ethereum, you actually have this diversity of experimentation. And take us for example. So we build Arbitrum technology. We also build Prism, layer 1 and layer 2. We're not paid by the Ethereum Foundation, to do this, right? We're doing this because we're an independent business in the ecosystem, and we figured out how to run a business here. And by the way, there are so many others that are doing this as well, right? You have all these different roll-up teams, and these other ones that you mentioned, like Uniswap and Unichain, also very strong ecosystem participants that are experimenting here. So other ecosystems, I think, feel more connected because they don't have this diversity and they don't have this experimentation. But I actually think that that's what drives Ethereum to succeed, this diversity and experimentation. It's a two-sided coin. The fragmentation is part of that, right? If everything was built by the same team, you wouldn't have this fragmented feel, but you also wouldn't have the immense amount of just mind power and incredible people that are building Ethereum today. So to your question of, is Ethereum ready? I think Ethereum needs to solve this fragmentation issue, which I think we will do. We are doing, even just speaking for ourselves at Offchain Labs, we are solving interop for Ethereum. And I love the experimentation. That doesn't mean that all these app chains will succeed, but the cool thing is we don't know what will succeed, right? Take the unit chain team. They're trying things that are interesting and different. Maybe they'll work, maybe they won't work, but we're definitely better off for having that experimentation in the ecosystem broadly, because fast forward to 5 years from now or 10 years from now, the EVM that we use, the VM that we use is not going to be the EVM of today. It may be the EVM, but it'll have changed and will have improved over time. That's only going to become from diverse experimentations. We don't know which one will be correct. So I encourage as many people as they want to experiment in the ecosystem. There's a separate question, which is, does every project need their own chain? I actually don't think so. I think experimenting on the app layer is important as well. I think that there's some projects that have their own community, can support their own chain. We certainly don't need to encourage every project to launch their own chain. But if those that want to take that bet and think that, hey, they're the ones that can pull it off, they have a differentiated offering, a different idea that can provide value, fantastic. I'd love to see it.
And in January, Synthetic sunset its perps trading and stablecoin and Arbitrum to focus on the base network. How much of a business development battle is there between layer 2 chains?
I would say there's certainly a business development battle, for sure. I would say in that particular one, I think it's more of, you can look at the DAO forums and the like, just follow the incentives a lot, like different follow the grants and follow the incentives, and that often answers a lot of these questions. But there's definitely a competitive environment where different layer 2s are going after the same projects. But I think actually more often than not, today there's some sort of specialization that's happening already. It's crude. It's not like fixed and the boundaries aren't exactly clear, but we know the types of apps that like to launch on Arbitrum. Arbitrum has a very, very strong DeFi presence. Arbitrum has extremely doing. It's an earlier vertical, but Arbitrum is extremely strong in gaming and has some of the strongest gaming teams in Ethereum building an Arbitrum. And that's sort of two areas where Arbitrum succeeds. Also in NFT culture, like in communities. So the apes and the Azuki community are all building an Arbitrum. When I look at other ecosystems like Base, obviously there's always going to be an overlap. I think that they have, definitely are stronger in the social, more consumer like led apps. And does everyone try to get everything? Of course, but I do think that for many projects, there is this idea of specialization. And one thing that we're doing on Offchain Labs is we're understanding that. And we're saying, how can we support teams, even if it would make sense for them to be somewhere else? So I'll give you like a very, very good example of that. You may be familiar with a team called Blackbird, which has like a restaurant reservation loyalty app that's on the Base network. They have their own chain that's a layer 3 on Base, but they're actually an Arbitrum Orbit chain, right? So we understand that the Arbitrum technology can be supportive of teams in different places and execution environments throughout Ethereum. For many, that will be fully in the Arbitrum ecosystem, but even for those that have other reasons, and maybe very, very good reasons to be elsewhere, the Arbitrum technology stack in many cases can still be very helpful to them, because it's the best execution environment out there. And our goal is to try to make it, make that available to people in the place that makes the most sense for them to be, and not to sort of fight them on those decisions every step of the way, but say, how can we be supportive of you in those decisions?
Will Arbitrum share sequencer revenue to stakers?
That's a question that's fully in the right. So remember, I don't even like the term sequencer revenue, by the way, because it implies, and I think this is and maybe it's true in other ecosystems, it implies that like the sequencer collects value. And the truth is, like, if you go to a movie theater, the sequencer is I would say the clerk. that you go and buy your ticket from, right? Well, in a world where there weren't just machines that you do that, like back in the day, so that they're the person behind behind the window, and it's the theater company that actually gets the revenue, right? I think it's similar in the chain. The sequencer has a job, right? Today, the sequencer of Arbitrum is not collecting any money to its address. All those, it's just basically ordering, and all those fees go to the network and the network treasury address. So I know that's not the point of your question, but the reason I like to mention it is there are people out there that think, oh, the best job in the entire ecosystem is a sequencer because they're collecting all these fees. It's like, well, is the best job working at the box office and at some theater, at some sports game? Well, maybe, but like they're not collecting they're just sort of the ones in the front office collecting the fees. Those fees are actually going to the corporation behind it. In this case, the corporation behind it, or the analog to that is the Arbitrum DAO, and is collecting all those fees. Therefore, now that we understand that, it's not that's a decision of the Arbitrum DAO, right? The Arbitrum DAO has this treasury that is collecting. How it wants to use that treasury, how it wants to distribute that treasury to projects that are building or otherwise, that's completely in its discretion. And there's a fully decentralized process where delegates can go ahead and participate. I might have ideas on particular proposals. I definitely will. There have been some staking proposals in the past, and I had ideas on, hey, does this make sense? Is this I particularly think that any real staking proposal should have a real purpose other than paying people, add security to the network and the like. One of the nice things about layer 2 blockchains is they don't need to actually pay validated rewards, which means they don't need to have this inflationary pressure, right? That's the nice thing about it. They can pay Ethereum for its security and pay less than they would otherwise need to each individually pay their own validators because they get this shared security resource. But if that's not to say there aren't other places where security or something else can be achieved, but that's totally in the scope of the Arbitrum DAO. And it's not something that we would or even have the ability to push or push to the chain ourselves at Offchain Labs or the Arbitrum Foundation.
Do you guys vote on proposals?
No, not as a company, and not as a policy of individuals associated with the company. We don't directly vote either.
Would you personally support such a move?
Again, I think it would really depend on the details of the proposal. For me, the question is it adding significant value to the network? Also understanding the legal regulatory compliance structure, and there's no really overarching way. There's no way to just in one broad stroke categorize any possible proposal. So I think it would really depend on what that proposal would be. I'd be happy to look at proposals as I have in the past and share my thoughts on them. But without a particular proposal in mind, it's hard to really know. But again, if there's a place where you can say, hey, we can improve the Arbitrum, say security of the network or some other core feature of the network, latency, withdrawal time. I'm not saying that there are technical ways to do this with a staking program, but you take some core feature of the network and say, we're going to improve that massively. All we need is to do the staking program. Then I'd be very interested in seeing that proposal and seeing how that's done and the details around it.
What are your thoughts on products like Lobbyfy, where users can bribe Arbitrum token holders? And I was curious, how you saw it impact the DAO, the future of Arbitrum voting, given that they're the biggest delegate.
Yeah, so I think that it's a very nuanced conversation. Would I prefer all delegates to just be delegates that are voting and don't have any external reasons to do that? Yes. Having spoken to the Lobbyfy guys, I can tell you, I think a lot of their and I think bribing, lobbying, I think there's a lot of words here that are actually actually unfortunate, right? I don't think it's the best named thing because having spoken to them, I think their goal, and I have no reason not to believe them on this, is to say, hey, how can we increase engagement among delegates here, right? That's what they're in. How can we increase excitement and voting to get people to participate more in DAOs? Forgetting about the mechanism for a second, that's a great goal. Do I think that there are risks with protocols that are as you said, bribing or lobbying. I think that there are potentially real risks involved, and I think that there are ways to be very thoughtful about this, right? So I've seen the team, I've been following them. They've done things like have now like high reserve prices, right? So the idea is, you know, there's one thing between there being a market for these things and like a market where like different delegates are actually, and there's one thing which like no one's watching this, and like all you need to do is give like the minimum bid and then you get all this value. So I think that there's a spectrum of different things that you can do, and I've seen them over time, take community feedback and try to incorporate some of these things. So I'm reserving my judgment on them. I don't know how it's going to play out, but I do think that increasing it's a delegation excitement and interest is an interesting experiment. I think though, if gone wrong, if you're just putting up this pile of votes and someone can sneak in and pay much less than that than that to vote, or they can pay a little bit of money and move a lot of money, like those things become very dangerous. But I think the ultimate answer here is you can't police everyone, right? It's an open ecosystem, people can do what they want, but getting more active delegates, encouraging those who have a large stake in Arbitrum. There are so many to, hey, maybe you should start paying more attention, and maybe you should make sure that you're actively delegating so your vote counts. I think that's probably the best outcome of all this, and make sure that people understand that, hey, there's a very complex system here and your participation is important.
What do you think about the latest changes at the Ethereum Foundation?
So far, I don't really. I've spoken in the past. I don't know Tomasz personally, but been very impressed by what I've seen. Same with is it HKW? Is that I believe. I don't know. I've never met personally, but I've heard good things. So I'm very excited about the future there. They seem to be doing wanting to engage deeply, wanting to do the right things, and wanting to really listen to the community. And I look forward to continuing. And we have close lines of communication with the Ethereum Foundation, where we'll share our feedback, positive or negative, but always constructive. So I think that they're moving in the right direction, and excited to have these group of people that have a shared vision, a vision that I share of making Ethereum, really continue to be the world's leading smart contract platform, and the platform where Web3 and decentralized applications will continue to flourish. I do believe that we have the right people there that are willing to take not easy steps and willing to engage deeply to make that happen. And I look forward to doing that with them. But all in all, very excited for the leadership changes.
All right, final two questions. Moving into politics briefly. What are you expecting to see from the crypto summit today?
It's a good question. There's, I don't know. I'm sure that there are some like announcements that are lined up that will be interesting. I don't really know. I've seen some speculation, but I have no knowledge on any of that. What I would say though is, I think just the very, if nothing was discussed in that room, but all we saw were, the administration at the highest level and some of the leading, teams in the industry getting together for the purpose of, leading and continuing crypto innovation in America. Like that signal and that image is probably like itself, more powerful than anything that will come out of it. And what I mean by that is the very willingness to engage and deeply engage at the highest level is going to set America up for success and continued success in crypto. And it's such a dramatic contrast to what we've seen previously, to the extent that I think that this is not only welcome, but it's what we need most. So I think the content is almost less important than the very fact that it's happening, which is already a massive win for the industry.
And are you pushing for ARB to be included in any potential token reserve?
So I actually think, and maybe this is controversial and goes against my, I'll answer it in like two ways. Maybe this goes against my, what you think my allegiances were, but I actually would, as a first priority, think that the reserve should just be Bitcoin. I think that that's non-controversial and doesn't lead, really to anyone. It's hard to argue against, right? I'm not in the Bitcoin ecosystem today. I was there, I started there, but Bitcoin as an asset certainly has differentiated itself in a way that's just universally accepted. I think that's the cleanest and easiest thing that we can do, and one that will really mitigate the dangers of otherwise. Because the dangers are, it's very hard, I think, to be in a regulatory seat, also know all the intricacies of all these different assets and understand who's pushing what for why. And I think we can just cut that off, but still accomplish basically everything by having Bitcoin be there, which makes sense as an asset, right? Even like other assets, like does it make sense for the U.S. to hold other assets more than it makes sense for the U.S. to hold America's top companies' equities? Like, I don't know, right? But like Bitcoin as an asset, certainly I think makes sense, like akin to makes sense America holding other strategic assets like gold. That being said, if the question is there will be other assets, which assets should they include? Certainly, I would think that the number 2 asset on the list is Ethereum. Again, I know others will disagree. I know others will have strategic reasons to disagree, which is why I personally think just let's not have this debate. It's just going to get too messy. But if we are having that, that's certainly the case. And then, to the extent that we're, then American-made assets, Arbitrum is obviously one of those. We spun out of Princeton University. All the development was done at Offchain Labs initially, up until the token launch. Everything was done at Offchain Labs, which is an American company and still headquartered in America. That's where I am. That's where my co-founders are. That's where most of the company is. So certainly, I think Arbitrum, should be high up on that list if we're going down that path of American assets. But ultimately, I think just Bitcoin would be cleaner. Just an easy win for the community that we can all rally around.
That makes sense. And that's all we have for today. I want to thank Stephen for joining this episode. And again, thanks to our sponsor, Awaken. Make sure to follow the Crypto Beat on Twitch and Spotify. Subscribe to the Block Pods on YouTube. And as a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the block. Thanks. See you next time.